I'm Keith McCullough, and welcome to another Real Conversation. It's a Friday, and it's a Friday in December, and I've been looking forward to this topic. This is not a topic that we've actually had on HedgeyeTV before, so I'm quite excited about it. I have one of my teammates here, Jeremy McLean, from our retail team, senior analyst on our retail team, and he's got all the really interesting questions. I'm just going to be the knucklehead asking gmoney what the hell's going on here. So welcome, G. We appreciate you making the time.
Hey, how are you guys? Thanks for having me on.
No, it's great. I mean, NFTs is something that, again, I am the neophyte, so I'm perfect for the person that's watching. Maybe not perfect, but close to it. You know, I'm like basic. So, and also I think you're familiar with at least a little bit of Hedgeye Nation and our audience. You know, a lot of them trade other things other than NFTs, but plenty of them are interested in it. And we've obviously gotten into crypto in the last couple of years, and this is certainly a place where Jeremy's done a lot of work alongside Brian McGough on a name like Playboy, for example. So I think that there's a general, interest, there's a general base pack of knowledge, but there's really, you know, I'd like to build it up from there. Like, let's just start with, and we'll do your background, obviously, but then get into the basics. But maybe if you give the audience your background first.
Yeah, sure. So I come from traditional finance. I was trading full-time for about 17 or so years.
Wow.
Following the markets for 20 plus years since I was a young teenager. So I definitely have, when I found NFTs, you know, obviously crypto in general just to me was always an interesting asset class because of the convexity of the asset class itself. And that's what attracted me to NFTs as well. But I always came at it from like a financial background and a financial mindset. But yeah, I mean, I was trading long short US equities for 15 plus years.
That's awesome. So you can really, I mean, at least for me, you're going to help contextualize this big time, because at least, and if you could, you know, not that you have to contextualize everything for me, the liquid markets or traditional markets trader, but that's super helpful. On the basics of it, maybe just start with NFT basics, and then we'll get into, you know, execution and stuff like that. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.
Yeah, so I mean, I think when you think about like what is an NFT, right? You know, something that's non-fungible, right? So the best way to describe it is, even though right now it's art, when you think about it and you sit down and actually consider like the properties of it, everything in the real world is an NFT. And so what do I mean by that, right? It's like if you have a dollar bill and I have a dollar bill and we exchange dollar bills, we both have the same value, right? And that's the same for Bitcoin and Ethereum and any other ERC20 token. But you're wearing a shirt right now and I'm wearing a shirt right now. But if we were to exchange our shirts, we don't necessarily have the same value. They provide the same function, but, you know, depending on the brand, the wear and tear, if there's stains or anything, right, that determines the value of each of our individual shirts. So that means that they're non-fungible, right? So basically now all we are doing now is transferring that property that exists in the real world into a digital format. And that's basically what an NFT is, right? That, you know, a non-fungible token is exactly that.
So it's actually, they're real things. They're just, people might get a little concerned because you don't look like a real human being, but you are a real human being.
Right.
Maybe that's the point. Is that we have a lot of things in this world that have not been monetized or properly valued, you might argue. I could think of a lot of things in life that way. I mean, particularly non-liquid markets. When you think about that, though, like the exchanges by which they trade, or how I would think about that, how can people put that in context?
You mean like on what platforms they trade on?
Yeah, like how does that work?
Yeah, so I mean, it's kind of like OpenSea it has most of the volume. I think we're over the next 6 to 12 months, we're going to be seeing a lot of other platforms come to market, because I think much like in the real world, liquidity is going to be like very fragmented, right? Like if I go to buy something, if I want to go and buy a designer handbag, I don't necessarily want to be buying it next to like in a Walmart, right? Like people look for those curated experiences. So when I look at the current NFT market, you take a look at a platform like OpenSea, and it reminds me a lot of like an eBay or an Amazon, right? It's like if I want to go there and find every collection out there, then for sure that's a great place to go. But we're still in early days on this, and I think that as NFTs become more prevalent, you're going to have very, very specialized and verticalized marketplaces, so that if you want to focus on play to earn assets, there'll be a site where you go for that. If you want to focus on digital wearables, there'll be another site for that that's specialized in those.
Well, I mean, I had never even. This is embarrassing, but I didn't even know what OpenSea was. So I'm looking at it right now. I mean, so you can explore it or you can create on it. So unlike on a traditional exchange, you can create your own NFTs on something like this.
Yeah, well, I mean, I think you have to see it more as like a marketplace, like an eBay, right? Because like when you think about it from like a financial exchange, like the NYSE or ARCA, like, obviously that's just a liquidity provider, right? So basically these are exchanges where, if I have something to sell, I can list it for sale, and buyers can come and the transaction happens. So I think you would think of it more of as a traditional marketplace, I think eBay is probably the best correlation into the world we have today.
Would you expect it all to converge? I think of crypto, how quickly it all converged onto similar platform or a consistent platform like Coinbase. Would you expect that to happen, or would you expect the crypto platforms to adopt NFT? There's a lot of different ways this could go, obviously.
I think it's going to be fragmented. Because I do think that ultimately, if you take a look at, let's say, like the consumer experience in Western culture right now, is like, you will go to Macy's for certain brands and you'll go to Walmart for different brands, right? So like you're not going to go to Walmart to buy like a Gucci bag, right? So it's like, I think that those curated experiences, and you see it like on Web 2 already, right? Where it's like people will go to like a website like Farfetch to get something high end, and then you go to Amazon to get like your consumer basics, right? So I think you're going to see that fragmentation happen as well in the long run. But I think we're still so early days that at the end of the day, right now, we consider everything an NFT when, everything is an NFT. So like at some point, this broad category of things will have to be broken down to being like, this is digital wearables, this is digital land, this is digital art, right? And like that, like things will be more segmented and broken down at some point in the future.
Okay. A couple more questions, and I'll let Jeremy ask the more intelligent ones. Well, what makes a successful, what's a successful NFT look like? What makes that happen, and how do you know what's bullshit?
Yeah, so it's very different for everything, right? I would say, if I had to say the one thing I look for more than anything else, is probably just the community of how much are the developers or the founders interacting with the community? Are they building out things for the community to rally around? But really, like, I mean, it's like almost everything else is like, you can't, like, you have to put in the work, right? It's not just right now we're in this mania, I'd say, of like profile pictures where the utility there is obviously being able to use it as your profile picture on Twitter, right? And that's how I discovered NFTs, and that's how they made sense to me, was because I was playing Fortnite at the beginning of quarantine last year, and I started playing with my friends and their 12-year-old nephews, and these kids, the first thing they asked me was, what skins did you buy? And I'm like, skins, like, they don't give me any special powers, like, I'm not buying any skins. But then, like, 2 or 3 weeks later, I'm buying a bunch of skins, and I realized that, that there's this massive super cycle that kid's 12 years old today.
Yeah. In
10 years, he's going to be 22. He's going to have his own discretionary income, and he's going to be totally okay with owning a purely digital asset. So at the time, Roblox and Unity weren't public companies, and I was like, I don't know how I can take advantage of the super cycle. And then when I found NFTs a couple of months later, I was like, oh, this is your skin on Twitter. Like it makes so much sense to me. And, I think over time that those things will be fragmented, but that, like, again, like, what makes a successful project, I think it's going to be a little bit different for each and every project, but ultimately I think it will come down to community.
That's now I get it. I mean, I did, or at least I thought I was going to try to contextualize this within my thick trading head, but it's actually much more akin to my 14-year-old son and his buddies engaging, like that example is crystal clear to me. And it's also interesting, and it's one other question that I had, I was eventually going to ask, I thought anyway. My son, for example, so you get, he's the perfect age for this, maybe not. But I'm like, okay, I'm going to open your first trading account. What do you want to buy? And he goes back and forth with me, and we had this whole thing throughout the summer, and he starts thinking of it kind of like Peter Lynch, okay? What he likes, and his mom's like encouraging that. I'm like, this is not actually what we teach, in terms of that game's kind of over. And he's like, Dad, how about like stuff, NFTs? And I'm like, what? And he starts asking me about these things, and literally, this is the way that he thinks. He thinks that this is a much better idea than buying a stock.
Mm-hmm. Yeah, and I mean, listen. Ultimately, when I got into NFTs, part of my thesis was, at the end of the day, we're all short rates, right? Like if you're long any asset class around the world right now, you're basically short interest rates. So my whole idea is like, how can I experience the most upside if we all have the same trade on? And like you obviously have to go further and further out on the risk curve. And when I found NFTs, I was like, oh, this isn't a call that doesn't expire on Ethereum. And, if I want to be long Ethereum or Bitcoin, why not buy, that derivative of the derivative? Because I consider Bitcoin and like crypto in general, I consider an option that doesn't expire. And so to me, it's like the upside is so good, right? Because it's like, if you're right, you're going to make multiples on your money. But if you're right in Apple, like you're going to make 20, 30%, right? So that to me was kind of like my whole thesis behind, all right, I'm going to take a portion of my overall portfolio. I'm going to allocate it towards NFTs, what I thought were high quality NFTs at the time, because if I thought Ethereum was going to be going higher, then all these other assets, just like in the real world, right? Like when the stock market's at all-time highs, luxury real estate, luxury cars, cigars, wine, watches, all these things are at all-time highs as well. So my thought process was, let me get this high convexity trade on that is basically an option, right? Because again, like I said, we're all short rates.
Yeah, we're all short rates, but I mean, some people are willing to believe anything in crypto space. I'm sure we're going to get into that. At least in my head, a community and something like skins in Fortnite, I actually have to discipline that. I have to stop these guys from playing that game for so long. You could actually see it. It's there. Right. Just one, and Jeremy's got some questions for you as well. So what were the first ones that you bought or that you invested in?
So I ended up buying. I fell into NFTs because there was a fractionalization platform that was fractionalizing a crypto kitty. And so like somebody on Twitter was talking about it. It was like, oh, I think this is going to go up 2 or 3x. And so I bought a bunch and it went down 50% right away. And so I was like, all right, fuck, like, what am I going to do here?
Shit, that's a little different than
the way the buyout mechanism worked was I could buy everybody out at a certain price, but it was a shotgun buyout. So they could turn around and buy me out at that price. So I was like, all right, if I made my money back and like I got bought out at break even, I was cool with it. But also if I bought it out at break even, I looked at the comps and I was like, I can maybe make an extra 5 to 6 ETH off of it. And during the buyout period, I ended up getting a loan against it because I found this lending platform and I basically got a full cash out refi. I bought it for $25,000 and I was like, all right, if I can get $10,000 out of it and go long Ethereum with it. And this is when Ethereum was at like $550. It was a little over a year ago. And I ended up getting a full cash out. So I got a $25,000 loan against something I just bought for $25,000. I went long Ethereum for, I believe it was 90 days. And I ended up getting out of that trade when Ethereum was, I think, like around 1,800, 1,900. So it was basically, I mean, all the things that have like that work in the traditional finance sector are all being built in the crypto space. And, they're going to be utilized by NFTs. Cause like when I started finding these different mechanisms, I was like, dude, this is insane. This is going to change the world, right? Because you're moving things that used to be only available to the richest people in the world down, you're scaling it down to the lowest end where, you could have an asset that's maybe like $500 and you can implement these tools that otherwise would have been unavailable to you.
That's wild, man. I love that.
I could see it on your face. You're ready to start buying some of these, right?
I mean, I think many would probably guess, but I'll trade anything. I mean, it's anything. So to me, there's a lot
Well,
of, and I like the juice. So, I mean, something like this.
And listen, I'm a trader as well, right? Like I come from the traditional trading world. So when I found Bitcoin, it was because people were telling me the volatility was crazy. And then I started going down the rabbit hole and I found Ethereum and ICOs. And then again, using that same concept, I'm like, all right, well, this is a much more liquid asset, but the psychology of masses still pertains to anything that has a trading market,
Yeah,
and that's
awesome.
kind of what drew me into NFTs.
That's cool.
Gee, if we could take a little bit of a step back and help people with like some of the why here, the innovation of blockchain and what that does for sort of digital ownership. If you could talk about that, and then also, how you think about the ownership of things beyond their utility, right? Because I've watched some of your interviews, and you think very similarly to me about both the dynamics for your history and where the consumer market is going with this. Right? You kind of hinted at it with like, the next generation is very comfortable with digital behavior or digital ownership of things in their lives versus somebody who's, wasn't raised in the post-2000 world. So please add some color around that to help people that might be very new to NFTs.
Color around what exactly?
We'll start with, so digital ownership, right? A little bit about how blockchain helps enable that, and then why, why would anybody want to own something digitally, right?
Right. So I'll go back to, I guess, the Fortnite example, right? Like, Keith, you said you have kids that are spending probably hundreds of dollars on V-Bucks to buy these skins, right? Like each skin is, let's say, $10 to buy. When, let's say I buy it for $10, I use it, and then all of a sudden I'm done with it. I don't want to use that skin anymore. There's nothing I can do with it, right? Like there's no exchange where I can sell it either at a loss or at a gain. And so it's basically something that I spent money on, but it's owned by Epic Games, and there's nothing that I can do with it. You see people that sell accounts on eBay, but like that's not super safe, right? Because there needs to be some sort of inherent trust there where either the buyer sends the money first, hoping that the account gets released, or the person that owns the account will release the account, hoping that the buyer pays. So there's inherently no trust there. What blockchain enables is that, let's say I spent money on that skin, and I use it for 6 or 7 months, and then all of a sudden I decide, hey, I don't want to play this game anymore, or I don't like this skin, I want to sell it. And you can sell it, at whatever price. Maybe it's a rare skin and the price has gone up and I can sell it higher. Or it goes lower because there's not much demand, but it's not a 100% loss, right? Because at some price point, there's going to be some clearing price point where the market will be like, okay, there's demand here. So to me, it's like giving people that digital ownership increases their flexibility and optionality of what they want to do with it, right? Like they're not necessarily pegged into that ecosystem if, let's say, a better game comes along and they want to be a part of that.
Oh, gotcha. And then, I think you have some interesting color. If you think about, what the utility value is, right? What's the value of these things beyond their utility? And people kind of say, well, that seems silly. Why would I buy a piece of art, right? But we do this in everything we buy, pretty much. Almost everything we buy is paid beyond the utility of it, except maybe like food. So I don't know if you have any sort of thoughts around, that aspect of ownership of those digital things.
Yeah, so I think that like when I went down the rabbit hole, I said I started with CryptoKitties, and then I was trying to find the next CryptoPunks, and it wasn't for like another like 60 or 90 days, because at the time that I got involved in NFTs, the floor of CryptoPunks was around $1,000. Just right now, the floor is around, I think, 400,000 right now. And so at the time, I was like, oh, CryptoPunks are so expensive. I want to find the next CryptoPunks. And as I was spending more and more time, I realized that, some of the most knowledgeable people in the space that knew the most, that were the most successful, had CryptoPunks as their profile pictures. And so to me, it's like there was that utility, right? Is like, one, I can afford, what does it say about a person that can afford to put $1,000 picture or whatever price picture as their profile picture? And what does that say about them, right? And then when you take that parallel to the real world, right? Like, let's say watches as a great example, where the difference between, let's say, a Rolex watch and a Casio watch is very negligible. They both tell you time. Neither of them tell you time any better than the other. But there's a reason why people will spend $10,000 on a Rolex watch, right? Because of the signaling that it sends, that if hey, if I can afford to spend $10,000 on a watch, what does that mean, right? And that's like, when I understood that, and just understanding that even though humans will be interacting more digitally, that doesn't necessarily change how we think and what our emotional responses are to things. So my whole thought process was like, rather than, let's say, me at the end of last cycle, people were at the end of the last crypto cycle, people would say, oh, like, when Lambo. And my thesis was that by the end of this cycle, people will be saying when CryptoPunk, right? Because why would I want to spend money on a Lamborghini that I drive around the neighborhood that only my neighbors who I barely talk to would see, when instead I could spend that same amount of money on a digital image that all my friends that I interact with all day can see, right? And so to me, it was like that human psyche of understanding how that works and kind of being like, all right, well, this is how I think it would play out in the digital world. But I think, to your point of like what's the utility beyond that, the thing that made me really, really excited about NFTs is the fact that everything in the real world is an NFT, right? So when we take a look at it right now, sure, it's just the first use case is art. Now we're starting to get into gaming assets, but like, what does the world look like 10 to 20 years from now when a mortgage, which is an NFT, comes on chain, right? And you can make a regionalized CMBS index fully on chain and fully transparent. You don't have to worry about collateralization ratios dropping and banks marking up their books, right? Like, what would have happened if all of like the 2008 debt crisis that we went through was fully on chain? You know what I mean? Like, so to me, that is like the really exciting and cool stuff that's really coming down the road, because I know that at some point, right, like having a fully and transparent system is ultimately better for everyone overall. Like, every time that crypto has a massive drawdown, 40, 50%, it makes it that much more anti-fragile, right? Like, you have people, sure, getting wiped out on leverage, but nobody's requiring a bailout. The financial system isn't being brought to its knees, and it's just being made that much stronger for the next cycle. So that to me is when I look at NFTs and how they get integrated into the future, that is what I find the most exciting.
That's a great point on just tying it back to everything we talk about here and everything that I've believed since starting the idea of like building Hedgeye is antifragility in a world where we'll do anything to make something more fragile, which is the entire financial system at this point. We're on the whim of the Fed whispering to somebody over at X to somebody over at Y. I mean, that is that's comforting. Let's just say that, because most people, that are perma bears in particular on the U.S. stock market, wake up every day saying that this is a house of cards and it's going to, come to its knees, which is true at some point. But what you're saying is, over here we're creating the anti-fragile, the anti-fragile sister that has a lot of the same attributes in terms of how capitalists would like to engage in it. They're okay with making and losing money. They know that when I came to Wall Street, those actually used to be the rules of the game. Now we have, of course, the Fed.
Yeah, no, it's funny you say that. Like, I guess. Listen, I trading equities, I made about 80% of my money on the short side, so I'd say over the last 12 to 13 years since the 2009 bottom, trading is obviously very, very hard if you're trading, mostly short, right? Like, I don't need to tell you where, when the Fed comes in and it's literally like, oh, we're down like 2-3%. Okay, no, like we're tapering the taper, right? Like, it's it's a tried and true game. And so to me, it's like, if we're all going to be short interest rates and, they're not going to be raising interest rates anytime soon, then, you should be long the highest convexity plays. Like, I'm not saying put your entire net worth into it, but no. I think there should be a portion of your portfolio that has that exposure, But
you're tying a lot of things together here. Again, I came at this, with a wide open mind, just trying to find some tangential things that I could latch onto. Car, wine, car, art, these are things that I've had or I have, and I think that's right. And I think you have a theory on this called a flex theory. The peacocking of it all. Use the Lambo example, and I could use an example of my son. Would be quite interested in owning a digital asset that's the equivalent of a Lambo instead.
Mm-hmm. Yeah, and it's funny because when I speak to people over the age of 40. They've generally had a harder time understanding why.
I'm going to be 47 in a couple weeks, man. Take it easy on me. I'm not a boomer.
Don't worry. I'm in my late 30s, so we're on the same level. But like when I talk to somebody under the age of 20, right? Like my friends' kids, they're to the same exact story that you had with your kids, where listen, when I was 12 years old, I was fascinated with the stock market. Like I started following the market when I was 12. Yeah. If I was 12 years old today, I'm pretty sure I'd be very fascinated with crypto and probably NFTs. And I see that with my friends' kids that, are like, oh, like, how can I get involved? And, luckily for them, their parents are, encouraging them and be like, okay, like I'll fund like a MetaMask in here and you can go around and play with it and get immersed in it and see what you can do. And to me, that's like super cool, right? Because I was very much encouraged to learn by doing by my parents as well. So when I see that happening with like today's youth, I'm like, I'm super stoked about it.
That's cool, man.
All right, we've got a lot in the queue. Do you have any other specific questions you want to hit on?
Well, I had a couple just that I wanted to knock down before, and I'm sure they're in the queue as well. In terms of partners, you talked a little bit about what you've done so far, but partners, whether they be people, celebrities, or corporates, I think you've done both.
Mm-hmm. Yeah, so I was involved in selling Visa, their CryptoPunk, back in August. I have also, like, again, I think because of my traditional finance background, I also helped Galaxy Digital buy their first CryptoPunk. They bought it from me.
Oh, wow.
And most recently, Adidas announced their entrance into the Metaverse, of which I can't really say all that much, but I've been working with them very, very closely over the last several months on helping them come up with what I think is the right NFT strategy. Because to me, the most important thing at this point is, how do we onboard as many people? Like, I firmly believe that crypto is the future. And so the key then is, like, how do we onboard as many people as possible, as quickly as possible?
Yeah.
And I firmly believe that NFTs are that Trojan horse that take crypto mainstream, right? But at the moment, it's kind of like a clunky user experience. And over time, I think it's going to get better. Like I imagine 10, 15 years from now, people that will be using blockchain tech will have no idea that they're using blockchain tech, right? It'll be as simple as like signing in with your email address to like any website right now. And, we're just not there yet, right? For the same reason that in 1999, all the promises, like pets.com was a great business idea, but it was just too early, right? Like, they went bankrupt in 99, but Chewy's is what, a $5 or $6 billion company last I checked, or something like that.
Yeah.
And so to me, it's the same type of thing. Is like the tech is there. It's going to be super revolutionary. It's just going to take some time.
Yeah, it's interesting that, like, it's not like you gave me a couple, like, crackshack.com as your first business partner or something like this. I mean, Visa, Adidas, and Josh Steiner, who does a lot of work on this on our crypto product, he always says this. It's just like 1997. Instead of the internet, we have 150 million people on this. In terms of adoption, it's pretty much. I mean, that's a story that people like because it's like it's accessible. You just tapped into it. Again, great example on pets.com versus Chewy. You did mention you mentioned Bitcoin a couple times. This is kind of a softball pitch to you, but again, what about it? What about the Bitcoin crowd and where you're at versus where they've been?
So I personally, I don't think I own any Bitcoin at the moment. The way I kind of viewed the whole crypto space was, let's say if Bitcoin has beta, Ethereum has beta on Bitcoin, DeFi has beta on Ethereum, and NFTs have beta on DeFi. And so when I was getting into the space, back to, I guess, the way I just look at the world is, if I'm going to have the same trade on, I want to have the highest convexity. And so I allocated a portion that I was willing to risk 100% on, because I firmly believe that you can't expect to make multiples of your money only risking a portion of your money, right? Like if you want to like 10 to 50x your investment, like you're realistically risking it all. Like you're not risking 10%. Like there's no stop where like I'm gonna go get out if it moves against me. It's like, that's fine if you're trying to make 30 to 80%, but when you're trying to make significant multiples, like it's an all or nothing bet and you have to ride that out. And so that to me is, why I think I've gravitated further deeper into crypto, because if it's all the same bet at the same way at the end of the day anyway, and I've been trading public markets for 20 plus years. I think that I can time it decently well. I don't want to I sold all that I had that was liquid in Q1 of 2018 because it felt just too frothy for me. Because I remember what it was like in 1999, 2000, when I was 17 years old and I didn't sell anything.
Well, I love how you answered that question, because again, that puts it within my domain or the context of how I think about risk. And you use the word beta. This has beta to that. So just so people know what the hell that means, if there are NFT people that don't risk adjust their portfolios for betas or anything like that, I don't want to get down the rabbit holes. What's interesting about it, let's just say that the S&P 500, the S&P 500 is beta. And correct me if I'm wrong in terms of how you tried to contextualize this, but Bitcoin is beta like the S&P 500 is to the stock market. So again, if you want to make more money, then you're going to go out the risk curve, and you did that appropriately, going to ETH, to DeFi, to NFTs. What's interesting about that is that most of the risk is actually where the betas are lower. You can find that in the stock market today. Like there have been multiple times where buying the growthier stock, for example, to become the TAM winner, if you will, that's actually been, so you were buying the higher beta stock, but you ended up making a lot more money and losing less when the market went down.
Right.
That, to me, like just looking at it, and I'm talking about today, I'm not talking about forever. Sometimes I get in trouble with these maxis because A, they've never traded a market in their life, so I can't imagine why when we're talking about betas, volatility adjusted returns. But again, when quad 4 hits, Bitcoin gets eviscerated. And I know you used to be a Hedgeye subscriber, so you know what quad 4 is, but when quad 4, a lot of real volatility in the market happens, what they do is they destabilize the thing that became most institutionalized. And we just saw this in Bitcoin. It was just last Saturday. I'm like, what the fuck? I'm sitting there, my buddy's driving because I had this issue with my foot, so I couldn't hit the gas. So he's driving. I'm watching Bitcoin trade at 6 in the morning, and I'm like, what the fuck? And then in 40 minutes, I don't know if you saw this move, but within 40 minutes, when most people on the East Coast are sleeping, it had this epic correction, and it's an institutional seller from London or Asia that was tapped on the shoulder and forced to sell. That guy or gal, whoever it is not trading your NFTs or DeFi or ETH, by the way. ETH didn't even trade remotely close to that. So what do you think about that? Like, again, once you get, I've often said, hey, watch it, Michael Saylor. You want everybody to be long Bitcoin. Now you're going to have, every graybeard from boomer.com. They're going to be risk managing it in their old wall ways.
Right. Yeah, no, and I totally agree with you, right? And I think that it's interesting. It's funny you say that, because let's say the highest beta stocks in the stock market have massively outperformed over the last decade. And that's obviously a function of low interest rates, right? Like if the cost of capital is cheap, then why wouldn't you be going for the highest beta plays? So I totally agree with that. And the interesting thing about, and I know somebody tweeted about this like a couple months ago, where even in the crypto space is like, the cool thing about NFTs is that you're not trading against these bots, right? Like these, high frequency traders that are trying to sit there and nickel and dime you and catch a few bips on every trade, because, the market size is so small, especially 6 months ago, right? And just now you're starting to see a lot more of bots coming into the space, and, liquidity starting to come in. And I think, and that's what people were working on, right? Is like, how do we increase liquidity? But there's no leverage in the NFT system directly yet, right? Like Bitcoin and even Ethereum to a really large extent have a ton of leverage that it's like, you can deposit your ETH, you can deposit your Bitcoin, and people will give you a loan against it, right? Like that doesn't exist in the NFT market yet. So you're talking about basically a cash trading market at the moment, so that those taps on the shoulders don't necessarily come and like right. have those nasty wicks on the downside just yet.
Well, that's and again, I love getting the maxi feedback because it shows their ignorance to some degree. I mean, if you've traded, I'll trade anything. Okay, so again, you want people like me to understand NFTs, DeFi, ETH. I'm long. I get a lot of ETH now because I finally figured out how to trade it. But I trade wine. I store HODL wine, because I drink it. That's my downside. That's a liquid asset that I could drink. It's good. I think most people would probably agree with that. But LiveX, where I could actually trade wine, like bulk wine, has no volatility. But it's one of the, so again, because you have, and this goes kind of back to where I was trying to get you to where I think I'm finally at, which is you said it's going to trade in different places. Like that's the place, if you want to sell a lot of wine, that's where you're going to sell it. And there's no tap on the shoulder. There's no hedge fund guy that's long like 18 cases of 2010 Brunello that he's got to get rid of on a Saturday morning. That doesn't happen, right? So the volatility of the asset, even though you might think that it's something that's a little harder to understand, is super low on a long-term basis because you don't have the institutionalization, you have specialization. And that to me, tell me if I'm just trying to put, your peg in my square box.
I think it makes total sense, right? I think part of it's a function of liquidity. Is the market's probably not nearly as big as obviously
not even close,
liquid trading market. But I think also part of it is that like nobody's necessarily, and I don't know the exact mechanics of that exchange, but I'm assuming that nobody's giving you leverage so that against your case of wine to buy more cases of wine, right?
No.
And that's where the issue I think comes into crypto is a lot of people. And listen, I'm in my late 30s and I've been trading for 20 years. I talk to a lot of guys that are young in like their mid to early 20s. And I'm like, dude, you have to manage your risk and you don't need leverage. Like you don't need leverage in crypto. Like you need leverage in traditional equities because the volatility is just so much lower. But if you can make 3 to 5x your money being long some token in, 30 to 60 days, you don't need leverage on that. Like all you're doing is introducing blow up risk. And like, I try to get these guys to understand that. And they're like, oh no, but I like it. I'm like, okay, you like it. You like to gamble. I like to go to a casino and play blackjack, but that doesn't necessarily mean I'm gonna make money when I do it.
Dude, I mean, the difference between this about to be 47-year-old chubby Irish guy and all the other guys and gals that I grew up with in this business that are in and around, like call it a decade of my age. The difference between why I'm still standing here and why they're Jersey Mike's franchisees or whatever they're doing or retire is because they used leverage and blew up. That's it. The biggest difference. It wasn't that they weren't as good on the analytical side. They used a different Excel model. It again is the risk parameters. And if you want to stay to play for the whole game, you might want to think that through. So thank you for saying that because I think that most people. It's like hodl and lever up. I mean, this is bananas. I mean,
but to your point is, listen, I like I said, I've been trading capital markets for a really long time. I've taught a lot of people, very smart people, and some people that are like very street smart because I don't think there's not like one formula of like success.
No, not even close.
Right?
No.
But the one thing I will say, and this is to your point that I've noticed when people are like, oh, what does it take to be successful? And I always tell them it's like discipline. Like that, the only thing that matters is like if you have a stop in place and you hit that stop, get out. Like the market tells you you're wrong, you have to get out because you have to live to see another day. And the second that you think you're smarter than the market is really when it all goes to shit. And that's when you end up having to find a new job. And I've seen that happen countless of times. I'm sure you've seen that as well, where really smart people come into the space, but if they don't have that discipline, they're not going to survive.
Well put.
Gee, so we've got a lot of questions here from viewers that we'll get to, but one thing if you could hit on is just some investing best practices in this space. But how do you think about quality versus breadth in sort of selection of your NFTs that you're investing in?
Yeah, so I basically try to go at the highest quality, at the highest end, projects that I think will be blue chips. I don't necessarily mint things anymore because I know that my wallet is tracked. And so, sometimes I'll mint something just as like a YOLO or I like the art or whatever, but I won't take a significant position, right? Like my most significant positions are in things like CryptoPunks, Chromie Squiggles, anything Artbox curated, Bored Ape Yacht Clubs, like things like that now have the community around it that, don't get me wrong, like in a bear market, these things will have massive drawdowns, but I think that these things have a higher terminal value than, something that's like, you mint the giraffes or something that comes out next week, right? And so to me, like those are much higher risk. And at this point, I would much rather hold on to the assets that I have that I think will be here in 20 to 30 years, as opposed to try to buy something to make a quick gain and flip, right? And I think the key is if you want to play that game, you have to understand like which falls into which bucket. It's fine to trade and to try to make a quick gain and a profit and to trade your way up, but that's just not the game that I want to play in a fairly illiquid market like NFTs.
It'd be interesting, Jeremy. Like if it plays out the way the internet did, or if it plays out the way that the mega cap tech stocks have in most recent years, it's actually not going to work out that way. It's not going to be everyone gets eviscerated in the highest quality NFTs. The bullshit ones are going to get eviscerated, and the value of the ones that people find value in, I think, at least I don't know what to think. Let's just be clear. But I'm again within my parameters, like how I think about risk management in the aggregate. I think it's going to be if these things are actually what you say they are, and if it's an X vintage bottle or 10 cases of Lafite, they're not going to trade with the volatility that some guys long a TAM stock that has no earnings. I mean, it's just going to be different. It could actually be quite bullish.
Yeah.
It's funny you mentioned that, because I generally, as my proxy personally, I look at the floor price of CryptoPunks. And so people are like, oh, the market's imploding.
Floor price of what? CryptoPunks?
CryptoPunks. So my avatar right now is a CryptoPunk ape. So CryptoPunks,
one of the original NFTs.
A quick little history.
Is that what you look like right now? You're a CryptoPunk? That your head?
Yeah, this is what my CryptoPunks looks like. Yeah. So just a quick primer on CryptoPunks. They were made in 2017. There was 10,000 of them that were it's generative art. Of those 10,000, 9 of them are aliens. 25 of them are apes, like what I have. 88 of them are zombies, and the rest are humans, generally split between male and female. And everybody has like different traits. So like, for instance, mine has this orange beanie, right? And that's what I'm recognized for. Generally, when people see an orange beanie ape, they're like, oh, that's gmoney. And so I generally track
that's awesome.
The price of CryptoPunks, now there'll be a lot of projects, NFT projects that come out, and they'll be going up and down with wild fluctuations where, it'll go from like, 0.1 ETH to like 2 ETH and then all the way back. But I look at the price of CryptoPunks because I have a fairly large position in them. And to me, they're like the gold standard of NFTs. And they don't move as much, right? Like they'll be like, am I going to 10,000x my money from here? Probably not, most likely not, unless, the Fed keeps printing a ton of money. But like, I'm probably not going to make a ton of money from here, relatively speaking, to like finding the next CryptoPunks and making a 10,000x. But I also have much less risk, right? Like that over the course of the next 5 to 10 years, I can feel fairly certain that the value of this will be higher than it is today.
That's cool, man. Now I get it. I think I get it.
Yeah, so
he is his own NFT.
Yeah, it's his new identity, right?
Freaking cool, man. And you know what? At least let's get into people's questions, because we have at least 15 minutes for that.
Yep.
But I think, if you don't mind me saying, G-Man or G-Money, the best part about it is that at least with me, you are appealing in terms of being trustworthy. You're transparent. You sound accountable. Like, these are the kinds of things that I would not have thought when having a discussion with a digital image, which I've never had before. It is interesting, and there's a lot that we're working on behind the scenes here on that front, because the entire edifice of the old wall is the opposite of that. They have the illusion of being, they want to create the illusion of being trustworthy, but they cheat, they steal, they need to be bailed out by the Fed on any mismanagement of their own leverage or lack of risk management embedded therein. It's really interesting, man. I mean, because you're out there, but some would say, like, if you ask some 85-year-old old wall guy, he'd be like, what the fuck is that? What, he's talking to like an ape? And then it's like, imagine we showed them what you did at Lehman Brothers, pal. I mean, you would go up in value very quickly relative to him.
So it's funny you say that, because a lot of I haven't been on like mainstream press, because generally they're like, well, you need to tell us your real name and you need to show your face. And I was like, nobody necessarily cares about what me as a human being says, right? Because I had developed this personality online, and I was always very true to, I wanted to be very authentic to who I am, right? Where I wanted people that when they meet Gmoney in person, they'd be like, oh, he's exactly, exactly like his tweets, right? Like he's exactly the same person I thought he would be. And I think that that's like kind of started this larger, let's say, identity discussion with, how personalized is identity, right? Like I'm sure your sons don't show like they don't have like their LinkedIn picture for like when they're playing video games, right? And they generally don't put in their real names, right? Like,
right.
Your username and the way you display yourself to the world is a very personalized thing, right? Because that's something that you can control and is very personality driven. Whereas the name that we're given at birth and what we look like, that's pretty much determined, before we're even born. So like, to me, I think it's like a really interesting, like, I think shit's about to get weird. And I think that's
that's a great way to put it.
I thought it was going to be, I'm getting more comfortable. I thought it's less like, as soon as I saw you on in the studio, I was like, what the fuck? Like, are we really going to do this? And now it's like I'm talking to a guy on a trading floor. I mean, it's not, I don't care what you look like. I mean, I never have cared what human beings look like or where they come from or who their dad is. I mean, enough about that. Let's take other people's questions.
I think you mentioned the Ready Player One movie. Like,
yes.
If you watched it, it's kind of introducing like what the future could look like here. And that meta change by Facebook gives a lot of legitimacy in the equity markets around it. So I like this first question, top question here.
Number one voted?
Number one voted. Do you see any long-term value in Playboy rabbitars? Will we see this market explode? If you followed that one at all.
I haven't done that much research on the Playboy NFTs yet, but I have seen it. Like I did like the artwork. I did try to mint some, and it sold out pretty quickly.
What does that mean, mint some? You said that a couple times. What does that mean?
Oh, minting is, so it's like let's say the NFT generation event. So like, let's say it's almost like the IPO, right? Where it's like you can go in and you can mint them at the price that they initially sell at, and then they just start trading on the market afterwards.
Yep. Okay.
So minting is generally open. Every project will kind of do it a little bit differently. Maybe like a whitelist for community members, or just free minting. Open for everybody. Like it really depends. But one of the things, and one of the really cool things I think about crypto in general, but especially NFTs, is that it's very community focused, right? So it's not like the institutions are coming in and taking down 10 to 20% of the allocation because they have a relationship with the investment bank.
Mm-hmm. I got some ideas on that for maybe you and I for later.
Yeah, sure. Yeah,
I got some real good ideas on that. Maybe they're really good. You'll tell me if they're not good. Anyway,
next question here. Someone asking, gas fees and ETH are often a few hundred USD per transaction. Do you see a competing token with a wallet similar to MetaMask entering the NFT space to disrupt Ether or Ethereum?
So I think it's obviously you have your side chains like Polygon. You have other. I think NFTs have taken off on Tezos. There's been a lot of activity there, and also obviously Solana with the cheap fees and the speed. And so I fully believe in, I try to make sure that I don't ever want to be a maxi in anything, because I think I like to consider myself smart enough to know that I don't know everything and I don't have all the answers. So even though I'd say most of my attention at the moment is spent on NFTs on Ethereum, I'm also very open to the idea that there's probably going to be a multi-chain world where different chains are used for different use cases. And because of that, NFTs will live on different chains. Which ones will rise to the top will remain to be seen. But at least for the time being, I feel like Ethereum has enough, let's say, total value locked and enough time-tested, proof of just like authenticity at this point, where people can trust Ethereum until the other chains get enough volume and time under their belts.
Makes sense. Can you explain or provide an opinion on tokenization of publicly held companies? Do you have any sort of take there?
Shares are kind of tokenized. Publicly traded companies are pretty much tokenized through equity, right?
Yeah. I think they refer to sort of take it on chain. If no real opinion, then we can move on.
I mean, the problem there, right, is like securities issues, right? So it's I think we probably need more clarity from the SEC on what, how security work, how KYC works, and I think that's kind of the real issue with regards to getting equity on chain and investor protection laws and all of that. I think that we're probably moving towards a world where that will happen. I just think that there's probably a lot of vested interest in keeping the system the way it is right now, and at some point I think the floodgates will open, but I'm not sure if we're just there just yet.
Gotcha. I think this person probably referring to T0 and Overstock sort of stake in that as the opportunity. But let's move on. So how long do you think it'll be before we see property deeds as NFTs or other such real property assets?
I've seen a few properties on chain at this point. The thing is, once we come up with some sort of standardized way to do it, you need to build the rails to make it happen, and then I think it will become more prolific. I would love to see it within 10 years. I don't know. Listen, when I bought this ape, I said to myself, I bought it for $150,000 in January, and I said I want to sell it for $5 million at one of the major auction houses in 5 years, and a CryptoPunk sold for $15 million 5 months later at Christie's. So my timing was obviously way off on that, but I do think it's going to happen. The question just is is it 5 years? Is it 20 years? I really don't know, but that's what I'm here for.
Dude, I was just looking. I mean, while Jeremy's asking you some questions, these freaking sales by Ether value are crazy, man. I mean, this is they're not crazy. It's cool. I mean, it's this. I don't know if you can see, if people can see that. Yep. Can you see that?
Yep.
This dude sold for this. Is that? Am I the only idiot that doesn't know who this is?
Alien. That's an alien. That's one of the rarest ones. So if you look at the guy, the ape with the blue bandana.
Yeah,
that one sold yesterday, and that sold for $10 million. I think whoever bought it, if I had the liquidity, I would have bought it myself. But I thought that was a steal. I think the fair market value that's probably closer to 20, maybe 25.
That ape with I didn't even. That ape, blue bandana, $10.26 million, and
sold yesterday.
And I got hedge funds fucking whining to me that other hedge funds are selling into year end. Oh, I feel so bad for you. Why didn't you, instead of your bloody stock picks, why didn't you pick the ape with the blue hat or the beanie? That's phenomenal. That's really cool, man. What is the thought though? I hate this question when people ask me, so forgive me. Why? Why the one with the blue beanie?
Well, so that ape is one of 25. So it's
right. There's only 25 apes. You're one of them. I got you. Okay.
So, and that one is just a rare one, right? So the apes very rarely go on sale. That one had a little bit of controversy around it because the guy there's an issue with or not. It's just that some collectors were hoping that Larva Labs, the creators of CryptoPunks, would open up the IP license on the CryptoPunks so that people can use them to make money off them. And that owner was just it was almost like a
protest sale or something.
Yeah, protest sale, pretty much, right? Like I said, that ape sold for really cheap. It's probably fair market value is around 20 million, if I had to guess.
Wow.
Gotcha. So I've got a question for you. I don't know how much you've gone into the crypto gaming space, or even the sort of metaverse space, but is there any tokens in that aspect? And these are more technically kind of more fungible tokens, right? That are that you think are interesting in those realms outside of the collectibles and art.
Yeah. So I think right now we're seeing a real proliferation of projects that are focused on play to earn because of the success that you've seen with Axie Infinity,
Yep.
right? I mean, that, like, one, the number of lives that have been changed in Southeast Asia because they've been playing that game, and then two, as an investor, like, you could have bought it at like 20 cents less than a year ago, and I think last I checked, it was trading at $113, and like that, like, has been phenomenal. Another token, I think, along those lines that has recently launched play to earn is the Central Games DG, and that is play to earn poker, where very similar to the Axie model, where you can use an NFT as a wearable, and that will increase your payouts, and there's this whole like gaming mechanism to it. And like, I actually just tweeted about it. The founder wrote a tweet like yesterday about how somebody's life like was changed. Like, they started playing this game with no money, and now they're making, I think, like $2,000 a month of income, backing other players, but then also playing on their own. And I really do think like the rise of the play to earn economy is going to be something that probably disrupts everything around the world, like not just like digitally, but also, if you think about it, probably like the whole manufacturing supply chain eventually at a real macro level. But like, to me, I think the opportunity that's happening is really incredible. And when people are like, how can these companies afford to pay the players to play? But it's like, I mean, what's the model right now, right? Like, generally people, if I started a game, I'd be paying Facebook and Google to AdSense and paying all these ads to these advertisers to onboard players. But instead of me paying these massive organizations, why not just give the money to the players and have like referral bonus fees and all of that go directly to the actual community that's building the game?
Gotcha. Here's an interesting one, and you've kind of touched on this, but given the illiquid nature of NFTs, how do you think about risk management of your NFT positions? They're saying, is it similar to closed-end hedge funds?
I mean, I think a good example would probably be real estate, right? I think that most people understand where, it's just not liquid. Like, if you want to sell something, you don't get instant access, right? One of the things that really attracted me to stocks when I was beginning my career, and why I wanted to be involved in liquid capital markets as opposed to real estate, is that, and I'm sure as traders, you guys have done this as well, where, I could buy something and then like literally 3 seconds later I sell it and then like I buy it right back, right? And because the cost to transact is so low, because it's like a small number of bips, it's very easy to do that, right? But if you buy a piece of real estate and you change your mind right away, you're incurring like, 10% fees each time you do that at the very least. And so I think you kind of have to look at the NFT market the same way, where, if you list something for sale, you're not necessarily going to get instant liquidity, but you have to kind of time the market a little bit better. And that just comes as a function of things that are less liquid. Like, anything that's less liquid, you have to be very, very careful of risk management and kind of over allot the risk, right? Like, you can't, if you think you're risking 10%, you're probably more likely risking 20 to 25% just because of the illiquid nature of the asset.
Yeah, that's a really interesting point, and one that we're gonna unfortunately have to finish on, because I keep talking to you all day long on this. This is because this has been eye-opening, suffice to say. But when you start thinking about that, the most valuable, high-quality NFTs, and then over here, you're effectively, this is manifesting its way into play to earn or shorter term manifestations of the whole thing. You have both, right? I mean, in the end, I suppose you're going to have both, because you're not going to have illiquidity over here with, like you said, this ape went for 10 million, but it should be 20. That's a pretty wide bid-ask spread. But over here, it's down to $2,000 a day playing to earn. It's very it's interesting, is it not?
Yeah, no, I agree, and I think you're going to see just more and more markets and verticals and industries getting disrupted over time.
Yeah.
And that to me is like the coolest part about the whole NFT thing, is that it's literally NFTs will be $1 trillion category, because every business in the world uses NFTs in the real world.
I mean, this is, and again, thank you, because you've given me, not only opened my mind and provided me an education on something that I needed, but when applied to my world as a disruptor, like, I got a lot to do now, man. And I got a lot of good ideas that, well, we'll see if they're good ideas or not. But there's a lot of disruption of the old wall to be done after this conversation. So I'll look forward to talking to you on our own time. But thank you so much, man. It's just really cool that you took the time to do this, but also transform your career and yourself. I mean, it's hard for people, when you do something for 15, in your case, 20 years, 30 years, sometimes they just can't. But you had the creativity, you had the open mind. You're certainly passionate about this, and I think that came through in this conversation. So thanks for making the time to have it.
Amazing. Thank you for having me on. I thought this was a great conversation.
Really cool. He's G Money. That's really cool.